Today, we're going to dig into a document that makes a pretty startling claim. It argues that the U.S. national debt isn't just a number on a spreadsheet. It's become a full-blown national security emergency. It lays out why the sheer size of the debt has made the country vulnerable and, well, proposes some pretty bold and, you could say, controversial solutions.
Okay, so at the absolute center of this entire argument is one number, $38 trillion. According to this source, that's where the U.S. national debt stands. And that staggering figure, right there, is the entire foundation for why they're calling this a state of emergency.
Now, if you're trying to wrap your head around a number that big, get this. The analysis points out that the U.S. debt is now larger than the value of every single good and service traded across the entire globe in a whole year. It's a really powerful way to show just how out of balance things have become.
And that imbalance leads directly to the document's core argument. See, this isn't being presented as just, bad fiscal policy. No, it's being framed as an actual economic state of emergency, one that has very real consequences for the nation's power and its stability.
Here's a crucial point the document makes. The dollar isn't backed by gold anymore, right? Its value is really based on confidence. But when interest payments alone top $1 trillion a year, the analysis suggests that this confidence is being propped up by a system that requires more and more debt just to keep going. It's a real test of that foundation.
So, how did we even get here? Well, the analysis points to several long-term trends. It argues that for decades, these big structural problems were just allowed to fester, things like uneven trade deals, massive trade deficits year after year, and a manufacturing base that got hollowed out, which of course led to a reliance on other countries for central goods.
And all of this culminates in what the document calls weaponizable leverage. It's a pretty intense term, right? Basically, it's what happens when you combine those two vulnerabilities, needing other countries to make your stuff and also needing those same countries to finance your debt. The argument is that this hands a powerful strategic tool to your competitors. It's leverage they could, theoretically, use against you.
And look, the point they're hammering home here is that this isn't just some abstract economic theory. The document argues that this creates very real, tangible limits. A country that has to constantly borrow just to function is, by definition, constrained. Its options are limited by the very people it owes money to.
Okay, so that's a pretty stark diagnosis, right? So what's the proposed solution? Well, the source doesn't just point out the problem, it lays out a really specific two-part response. These are framed as emergency measures designed to stabilize the situation.
The strategy is basically a 1-2 punch. First, a defensive move, putting in place what it calls reciprocal tariffs. The idea is to match the tariffs that other countries put on U.S. goods to try and level the playing field. Then there's the offensive move, going out and actively recruiting huge amounts of global investment to kickstart a massive economic revival at home.
So let's break down how each of these is supposed to work, at least according to the analysis. Because the goal here isn't just to, manage the debt, it's to fundamentally change the game and restore the country's economic leverage on the world stage.
First up, those tariffs. The document argues they're kind of a multi-tool. The idea is to make producing goods at home more attractive, encouraging companies to bring manufacturing back. At the exact same time, those tariffs would bring in revenue for the government, which helps chip away at the deficit and slows down how fast the debt is growing.
Now, the second part of the plan is built around an even bigger number, $16 trillion. That's the amount of global investment that the source claims has already been lined up and committed to flow into the U.S. economy for things like infrastructure, energy, and manufacturing.
According to the plan, this massive influx of cash is designed to set off a whole chain reaction of good things for the economy. It's meant to create this powerful growth cycle. You get stronger GDP growth, which means a bigger tax base, and at the same time, you're rebuilding those critical domestic supply chains and boosting energy independence, tackling all those structural weaknesses we talked about earlier.
So here's where they connect it all back to that giant debt number. The core idea is that you can't just pay down a debt of this size. You have to literally outgrow it. The claim is that an economic expansion on this scale could generate so much new wealth that it could, over time, effectively offset a huge chunk of the debt.
And this all builds to the document's final conclusion. It frames all of these policies not as just one possible economic strategy among many choices, but as an absolute necessity, a matter of national preservation in the face of what it sees as an existential threat.
To really drive the point home, the analysis redefines what national security even means in the 21st century. It argues that true security isn't just about having a strong military anymore. It's about economic sovereignty.
The power to make what you need, to control your own supply lines, and to have a currency that people around the world trust.
And this quote right here really says it all. It captures the ultimate framing of their entire argument. The source is trying to lift this whole debate above the usual political squabbling by saying, hey, this is an emergency. It's about survival. Just like you'd mobilize for a war, it's a really urgent call to action.
And finally, the source leaves us with this one very provocative question. It completely flips the script. Instead of asking, can we afford to do all this? It asks, with a debt of $38 trillion, what's the real cost of doing nothing at all? It's a question that's really designed to make you rethink the entire debate in terms of risk, urgency, and ultimately preservation.